Take 2. Senate Banking Committee sets a date to amend and vote on sweeping. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. Today, the Senate Banking Committee just locked in a vote date on sweeping new legislation. This matters because whatever passes next week will reshape how digital assets are taxed, traded, and custodied in America, and the ripple effects are already hitting market prices. Let's start with what actually changed. The committee announced it will amend and vote on comprehensive crypto legislation. That sounds procedural, but it's not. For months, this bill has been stuck in working group limbo, stakeholders arguing over stablecoin definitions, custody rules, and whether decentralized finance gets exempted or regulated like traditional finance. Setting a hard vote date means the negotiating window just slammed shut. Whatever language makes it into the bill by Thursday is what gets voted on. No more delays. No more closed-door revisions. Why does this timing matter right now? 2 reasons. First, market sentiment on crypto policy has been in a holding pattern. Bitcoin and Ethereum prices have been volatile partly because institutional investors don't know what the regulatory landscape will look like in 6 months. A confirmed vote date removes uncertainty, and market participants hate uncertainty more than they hate bad news. Second, if this bill passes the Banking Committee, it moves to the Senate floor. That's not guaranteed to pass, but it's a massive signal that serious regulatory structure is coming, not theoretical. Here's the contrarian angle nobody's talking about yet. The crypto industry has been lobbying hard to shape this bill, but the Banking Committee vote will happen with or without industry consensus. That means whatever gets voted on will likely include provisions that some segment of the crypto community actively opposes, probably around stablecoin restrictions or custody requirements. So even if the bill passes, you'll see a split reaction. Some crypto firms celebrate clarity, others fight the specifics in court or in the media. Let's zoom out and think about stakeholder impact. For institutional investors sitting on the sidelines, a regulatory framework is actually good news. It reduces legal risk and makes crypto feel more like a legitimate asset class. For crypto entrepreneurs and decentralized finance projects, the vote introduces real risk. Depending on how the language lands, some DeFi protocols might become illegal to operate from the US, or founders might face personal liability. For everyday retail crypto holders, a vote date means the tax treatment of their holdings might change. Staking rewards, yield farming, and transaction reporting could all shift. What changes next? Watch 3 things over the next 72 hours. 1. Lobby intensity from crypto firms will spike. Every major exchange, protocol, and venture firm will be trying to get amendments into the bill language right now. 2. Listen to what specific stablecoin issuers and decentralized finance projects say publicly. If they're suddenly quiet or evasive, it signals they're worried the bill language is going to hit them hard. 3. Watch Bitcoin and Ethereum price action. If prices rally hard on the vote date announcement, it means markets are interpreting the news as positive. If they stall or drop, it means uncertainty actually got worse because now investors can see what the regulations will actually say. Here's the India and global angle. India's crypto regulatory approach has been watching America closely. How the US structures stablecoin rules, custody requirements, and DeFi treatment will likely influence India's own framework. That matters for Indian crypto startups and users because stricter US regulation often creates regulatory pressure cascades across other countries. On the global side, if America passes tough crypto regulation, it doesn't make crypto disappear. It relocates. Trading volume shifts to unregulated jurisdictions, offshore platforms grow, and US crypto firms lose competitive advantage to Singapore or Dubai-based operations. The bottom line, this vote date is a momentum shift. The crypto space went from regulation is coming someday to regulation votes in 7 days. That changes incentives, signals confidence in the process, and introduces real risk for certain segments of the industry. If you're invested in crypto, work in the space, or just pay attention to markets, this is worth monitoring closely over the next week. The Senate Banking Committee just locked in a vote date on sweeping crypto legislation, and it changes everything. For months, this bill has been stuck in negotiations. Now the committee is voting within days, which means the window for amendments just slammed shut. Institutional investors have been sitting on the sidelines waiting for regulatory clarity.